It's November 1910, and Frank Vanderlip, one of America's most powerful bankers, quietly boards a train car in New York. Now, there's no press coverage, there's no public announcement. Officially, Vanderlip is going on a hunting trip. At least that's what he tells people, including his wife. But the truth is, Vanderlip has no intention of hunting ducks. I'm John Hicks, and this is Fine Print, the forgotten footnotes of financial history. Now, Vanderlip was the president of National City Bank, today known as Citibank. And this trip wasn't a casual vacation. It was actually a highly secretive meeting. Now, 3 years earlier, in 1907, America had experienced a severe financial crisis. Banks collapsed, people panicked, and the entire U.S. economy was hanging by a thread, nearly went under.
This is outrageous, locking the doors on their customers.
Now, back then, there was no Federal Reserve. There was no safety net. The crisis only ended when America's richest banker, J.P. Morgan, personally stepped in with his own money just to prevent total collapse. Morgan's intervention worked, but bankers quickly realized it was dangerous for the entire American economy to depend on one wealthy individual just to keep things stable. They needed a central banking system, something that would manage money supply and prevent future crises. But the American public, they would have hated that idea. To most people, central bank sounded like something that European monarchies did, a direct threat to American independence and freedom. In a small group of influential bankers and politicians, they decided to tackle the problem quietly. Now, Vanderlip wasn't alone on that private train. He was joined by Senator Nelson Aldrich, Henry Davidson of J.P. Morgan, Paul Walberg, and Benjamin Strong. Now, together, these men represented Wall Street, Washington, and even European finance. And their destination was Jekyll Island, a remote private resort off the coast of Georgia, owned by some of America's richest families. And it was the perfect place to gather secretly and write a blueprint for the central banking system without the public ever even finding out. For 9 days, these men worked in absolute secrecy. They even avoided using last names. Waitstaff and the other island employees never knew their identities. Now, each day, behind closed doors, they debated, they drafted plans for a new American central bank. They knew how angry the public would be if word ever leaked out that Wall Street and Washington insiders were privately crafting America's new financial system. But when that group finally left Jekyll Island, they had a detailed proposal in hand, one that would later become the Federal Reserve Act of 1913. But first, they had to carefully shape the public narrative. They changed the language and replaced central bank with Federal Reserve System. They designated regional branches to appear more decentralized and emphasized public oversight, even though private banks would remain deeply involved. Now, it was, in many ways, a masterclass in financial public relations. Now, years later, Vanderlip told the full story in both a 1933 written account and a 1935 interview for the Saturday Evening Post. He openly admitted that if the public had found out about that secret meeting back then, their banking plan would have never made it through Congress. Today, we still live with that financial system created in that secret gathering. And every time the Federal Reserve adjusts interest rates, it impacts our mortgages, our credit cards, our savings accounts. They're still operating under the guidelines that was first sketched out secretly in a private island more than a century ago.